UnitedHealth Group stock, ticker symbol UNH. This stock is down almost 13% on the year-to-date chart, underperforming the SP500. But they just released earnings today and the stock went up roughly 6% as of recording this video. EPS was reported at 6.91 and revenue is coming in at 99.8 billion. Both numbers beat the analysis estimations. And people love UNH stock because of multiple reasons, one of the main thing being the dividend. And I understand why, with the dividend yield at 1.7%, which is a decent number. And take a look at the 5-year growth rate of 16%. If we look at the past 5 years, we see that UNH easily outperforms the SP500 by roughly 20%, and this is including dividends. So could this be the perfect time to buy UNH stock? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does UNH do? UnitedHealth Group is one of the largest private health insurers, providing medical benefits to about 53 million members globally, including 5 million outside the States. Diving into the earnings, we see that revenue was reported at almost 100 billion, which is insane. They grew 8 billion year over year. EPS reflect $0.74 per share of impact from the cyber attack. The net loss of $1.53 per share is due primarily to currency effect of the Brazil sale and cyber attack. Adjusted earnings of $6.91 include the 0.25 Brazil sale. To me, this number looks really good. Looking at the total revenue, we see that revenue grew 8 to 8.5 billion and the adjusted net margin is in line with previous year. To me, this looks pretty good. Looking at the biggest segment, United Healthcare, we see that revenue increased roughly 5 billion and adjusted margins are in line with previous year's number. Also looking pretty good to me. Looking at Optum, revenue increased really nice, but operating margin decreased in both cases. For the full year of 2024, UnitedHealth expects to report an EPS in the range of $17.6 to $18.2 to reflect the Brazil sale and cyber attack. The adjusted EPS is still expected to be in a range of $27.5 to $28. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. UNH is a 435 billion market cap company. PE ratio is at 19, indicating they are at a fair valuation right now. Later in this video I will show you my 3 price targets for UNH stock, so make sure to watch until the end. And in the meantime, please let me know your thoughts on UnitedHealth Group. Revenue is at 437 billion and in this graph we see that revenue went up in the long run. And this is one of the reasons why I like this company so much. It is growing really steady and consistent. Margins are going up and down in the past decade, but in the past couple of years there was an upward trend, and margins are stabilizing right now. EPS is pretty much the same story as the revenue. It is growing really steady and consistent. Analysis expected EPS is growing really nice and steady in the coming years, all the way up to $45 per share. On average, you're looking at 13% growth per year. To me, this looks really good. For the revenue analysis, expect pretty much the same. The only difference is that growth numbers are a little bit lower with 8% growth per year on average. Return on assets is sitting at 8%, which is a decent number. Return on equity looks really good. And the most important number, return on invested capital, is sitting at roughly 14%, which is a great number. It is also higher versus the 5-year average, which is very nice. Current ratio is at 0.8, which is a great number. It is also pretty steady historically, so this looks good to me. Right now, UNH has 67 billion in debt, and I prefer companies that can pay down at least a big chunk of the total debt with the total cash. UNH has 30 billion in total cash, so they can pay down a big chunk of their debt. To me, this is a really good sign and also one of the main reasons why I like them so much. But it is still very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run at a really steady and consistent pace, so this comforts me a lot. Shares outstanding are decreasing in the long run, which is something that I really like. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 1.7%, which is a decent number. I would love to see a higher number here, but it is still looking pretty good. Annual payout is at $7.52 and payout ratio is at only 29%. I prefer 50% or lower. So right now they have 71% left in cash to buy back shares, pay down debt, do acquisitions and all other things. And now it gets really interesting. The 5-year growth rate is at 16%, which is an insane number. And they have increased the dividends for 14 years in a row, which is also pretty impressive. And if you take a look at these numbers, the dividends paid since 2012, you see that UNH did increase the dividends at a high pace. However, most recently growth is slowing down a little bit. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. In here we see that historically it looked really good. The range of 24 to 30% is looking really good to me. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It is expected to increase at the same rate as the past couple of years. And overall these dividends look really good to me, but how about the historical returns? I decided to compare UNitedHealth Stock with the overall market, in this case the S&P 500. Next to that I added ELV Stock, one of the competitors of UNH. On the 5-year chart we see that UNH Stock did beat all stocks in this list by a decent amount. In total, UNH returned 108% including dividends. On the 1-year chart things look pretty interesting. The S&P 500 did beat all stocks in this list by a significant amount. In total, the S&P 500 returned 23%, while UNH was sitting at minus 10% and ELV at 4%. On the 6-month chart, it is again looking interesting, because both the S&P 500 and ELV are beating UNH by a significant amount. On the 1-month chart, all three are at a negative return, and UNH really took a jump with a 5% increase today because of earnings. Bottom line, UNH did beat the S&P 500 and a close competitor in the long run. In the short run, they are underperforming both. So, could this be the perfect time to buy UNH stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth, I'm filling in 6, 8 and 10%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin, I'm putting in 5.5, 6 and 6.5. For the free cash flow margin, I'm putting in 6.5, 7 and 7.5. For the PE ratio, I'm putting in 16, 17 and 18. For the price to free cash flow, I'm putting in the same numbers. It is one of the bigger companies out there that is still capable of growing at a high pace, but this time I'm being a bit more conservative. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now, UNH stock is at $470. I hit analyze and we see a lot of great numbers. We have a low price target of $341 to $403. We have a mid price target of $446 to $521. And we have a high price target of $581 to $670. To me, the mid price target is the most justified here, telling me that this stock could be undervalued. Which price target do you think is the most justified here? Let me know in the comments down below. My final conclusion is that I keep buying UNH at current prices. It has been hit a lot recently, but earnings show that UNH still can perform at a high level. About a week ago I bought more shares of UNH, and today that is paying off for me. Most fundamentals look really good, and I really like the fact that they surprised most investors by delivering these results. From a dividend point of view, I also get excited. Dividend yield is pretty decent and growth numbers are looking really good. From a value point of view, things also look pretty good. I think the stock is undervalued and I will keep buying at these prices. But remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.